Hello everyone, Sage here for Kalkine Media and welcome to another edition of the Executive Corner Expert Talks. In this edition, I'll be shining a light on Black Canyon Limited. And Black Canyon Limited has a ticker code on the ASX as BCA, is an Australian manganese explorer that owns a set of prospective tenements located in the mineral-rich Pilbara region of Western Australia. And the company is committed to discovering and developing manganese mines. So the best way to find out about the work they do is to sit down with the Executive Director, Mr. Brendan Cummings. Brendan, thanks so much for joining us today.
Thanks, Sage. It's a pleasure to be here on Kalkine Media. It's the first time I've presented with the company. So, yeah, really looking forward to telling investors a bit more about Black Canyon and what we're doing.
Oh, fantastic. Well, to make the most of our time together, I think we should get started. Firstly, with a big congratulations on hitting a vital milestone with the completion of the Flanagan Bore scoping study. Can you shed some light on the key objectives of the study and what the study outcomes mean for the company, please?
Yeah, sure. So Flanagan, with Black Canyon, we listed the company about 15 months ago. So we've had a really busy period. Done 2 resource drill outs. We've done quite a lot of metallurgical test work, and that culminated in the completion of a scoping study. So like all scoping studies, really the key objectives was to really understand the value, to understand the financial metrics of the project. And manganese, it's a bulk commodity. So I guess one of the key aspects of manganese is actually de-risking the resource side, which I believe we've done. We've drilled that out to indicated status. And we just recently completed another drill program, so we'll get that to measured. So that will definitely tick the box in terms of de-risking the resource. Then the next critical stage is de-risking the metallurgical component and processing. So we need to understand how we can extract the manganese out of the ground. And we've done that by drilling diamond core holes and done quite a lot of metallurgical test work on that core. And actually been able to produce a product, a concentrate product, of around 30%, 30 to 35% manganese, which is a cracking start. That's a fantastic start. And we've still got quite a bit of work to do as we progress the project. But so really it was de-risking it, resources, processing, and then in terms of marketing, we need to know that we can actually sell the product. So I've had several conversations now with commodity traders, and they were able to shed some light on the market. And we believe we'll be able to sell our product into the conventional silico manganese or ferromanganese market that feeds into steel. So really that was the first part of the scoping study, was just to show that we can de-risk it. The second part is really showing value in the company. We're a 10 million market cap company, but the scoping study has shown 134 million NPV. So that's an order of magnitude value for the company, and the financial metrics are really solid and really quite robust. So we're looking at a very modest $44 million capex to build a 1.8 million tonne plant, which for a smaller company that's actually achievable. Once capex get above 100-200 million for a small cap company like Black Canyon, that actually difficult. It becomes more difficult to finance. It can be done, but it certainly depends on the uniqueness of the project. So 40 million capex for a small project like this is achievable. So that was good. And also the cash flows that come out of this in the early life of the mine. In the first 4 years of the mine, the cash flows we're roughly producing 32 million every year for the first 4 years free cash. So we know that the payback period is less than 2 years. So you can really understand that it becomes quite a compelling investment case at this scoping level stage. So yeah, really happy with the way it's turned out. Like I said, it's been a busy 12 months, and to culminate in a scoping study, that's really quite positive. Internal rate of return is 67%. That itself shows that the project does have a fair bit of robustness as well associated with that. And we weren't overly aggressive with the pricing of the commodity as well. I think we were quite conservative with some of the pricing assumptions that we put into the scoping study. So yeah, that's why we're really proud and happy with the achievement that we've shown the market.
Fantastic. Thank you for summarising that for us. So sounds great if the survey has, or the scoping has found 30% manganese available to you at your site. That's very commendable. Could you help us understand the process? Now, these big terms are used a lot in announcements like surveying, scoping, assay, pre-feasibility. What part of the process is the scoping that you've mentioned?
So the scoping level study is the first stage. When you're looking at evaluating a project, the scoping study is really the first part of understanding the financial value of the project. So once you've got a resource, you're able to go and apply a scoping study. And really what you want to know is how much material you can process economically. And you do that through optimization of the resource. And also, you also need to know, can you sell the product? So really the key things are how much in the ground you can mine economically, what your production targets will be, the life of the mine, how long it's going to be, what's it going to cost approximately to go and build the mine. And then once you've got an understanding of that, you set yourself up for a more detailed feasibility study. And you can either do a pre-feasibility study or launch into a definitive feasibility study. And because of the project like Flanagan Bore is a smaller scale project, I'm quite comfortable just going straight into a definitive feasibility study. And then really you can hopefully get finance on that as well.
Thank you for helping us understand that a bit better, Brendan. Now, you mentioned about the $40 million range for the CapEx. Now, given manganese has applications in steel manufacturing, as well as the emerging energy storage space, which markets are you specifically targeting to fund this?
I think, look, with manganese, the bread and butter market is the steel industry. So we're talking about a 1.84 billion tonne steel industry, and most of that comes out of China, obviously. And in every tonne of steel, there's about 10 to 15 kilos of manganese in that steel. So really the baseload demand for manganese and will be no different to most other manganese producers, will be into the steel industry. And that's, you know, in some respects, I guess China is slowing down in terms of steel demand. But India, almost a similar population size, is really showing its intent on increasing steel production in that country. And there's a couple of advantages in there. They've actually got cheap labour, cheaper energy. So I could really see the demand for steel increasing, slightly shifting away from China. I mean, China's a massive market, but sort of moving more towards India, where their consumption per capita for steel is only 75 kilos, where on average around the globe it's about 260 kilos per capita. So there's a massive amount of growth to be had in countries like India. So that's one aspect that we would be selling our product into. So what they do is you sell your manganese concentrate, which comes from the mine, on a ship, gets sent to other countries where it's alloyed into silico-manganese or ferromanganese. And it's the silico-manganese that is the largest component of that market at the moment. And that's blended or fed straight into the smelters where steel's produced. And the silico-manganese has many benefits in adding that to the steel. It desulfurizes, and manganese itself makes the steel more hard and ductile. The steel industry is obviously a key market, but what's really growing and developing is the electric vehicle and battery sector. So the development of electric vehicles over the last decade has just been phenomenal. The growth going forward to the next decades and into the future is going to be exponential. And I'd be really surprised if 2 generations away there's any combustion vehicles being manufactured. It's the drive to decarbonise and reduce our reliance on hydrocarbons is immense, and as a result of that, the battery and electric vehicles that sector is growing. So really what we're going to do is down the track is look at producing a downstream manganese sulfate, So you get the manganese concentrate from the mine, you dissolve it, you produce a manganese sulfate, a high purity manganese sulfate, and then that gets added to the other precursor minerals such as nickel and lithium and cobalt into nickel manganese cobalt batteries, and they're pretty much the battery packs that go into 70% of the electric vehicles these days. But there's also evolving chemistries which I can talk about a little bit later on as well.
Great, thank you so much for that information. And it's great to see that the sentiments change and we're really pushing forward for the renewable energy and more electric vehicles as well. And it'll be interesting to see what it does for your sector especially. So manganese sulfate is a critical precursor material for lithium-ion batteries and other evolving battery chemistries, which you have just touched on.
Yep.
To elaborate further on this, what's your take on the upcoming trends in the manganese market in the near to mid-term, please?
Well, I guess if you look at firstly where the batteries are made, so China is the dominant producer of all the batteries for these electric vehicles. In respect to manganese sulfate, 90% of manganese sulfate is actually made in China. So I think there's going to be a push for some diversification of supply. And then you'll get other countries like America who are going to, I mean, they've always had a very large car manufacturing industry, but they've just got to pivot now and really move towards electric vehicles. And ideally, all these precursor materials such as manganese sulfate, nickel, lithium, cobalt, they need to be close to source. So whilst 90% of manganese sulfate is produced in China, that's where most of the batteries are actually made. So that makes complete sense. Going forward, the US are going to want to build their own batteries in country and have less reliance on China. And the countries of Europe as well, there's a massive push over there to start producing their own batteries. And they're doing it now. If you look at all the major car manufacturers, Volvo and Stellantis, who owns a number of the companies, they're all moving towards batteries. So your base load, your typical batteries are nickel manganese cobalt battery. Manganese often becomes forgotten in the mix because it is a cheaper component of those batteries, whereas nickel and cobalt is much more expensive. So there's a real push to reduce the amount of nickel and cobalt in these batteries and introduce cheaper components such as manganese. So that increases at the expense of nickel or cobalt. But the other big battery type is the lithium iron phosphate batteries. Now, they've only recently become more popular in the last probably 2 years. And really, they're a cheaper battery and they're really driving the volume market in the lower end spec vehicles. The trade-off is they don't have as far range. So when you charge your LFP battery in an LFP vehicle, you might have a range of 400 kilometers on the charge, whereas with the more expensive nickel manganese cobalt in the higher end vehicles like a Tesla, your range is up to 800 kilometers on a charge. So I think really how many kilometers do you drive a day will come into the equation as well, the cost equation. So if you're only driving 100 kilometers a day, you don't really need a large range. So a cheaper battery does make sense. But in saying that, there's been a more recent development in the lithium iron phosphate batteries, LFP batteries. And it has been known for quite a while that if you put manganese in these batteries, you can actually increase the energy density, which will increase the vehicle's capability of driving further distance at really not much additional cost. In fact, Cattle, which is the largest global manufacturer of batteries based in China, have come up with a formula for a M3P battery, which is essentially a lithium iron manganese battery, which have been known for some time, but they're actually putting that in production in 2023. So I can really see the lithium iron phosphate batteries with manganese increasing market share in the future. And for me, that's perfect. There's manganese in the high-end batteries then, and then manganese in the low-end batteries. So we've got all bases covered. So very happy to be in that sector.
Well, thank you for sharing that information, especially about the US intending to start manufacturing their own batteries. because I think China's been able to really keep the costs down of these new electric vehicles to only 10% above the traditional type of cars because of that fact that they manufacture their own batteries. In comparison, I think in the Western world, electric vehicles are 30 to 40% more expensive than combustion engine vehicles. So that's great to hear that they're trying to, hopefully keep the costs down of these types of renewable type resources.
Yeah. Well, it sounds like I'm teaching to the converted, so I'm putting to the converted, so perfect.
I would love to have an electric vehicle one day. So Brendan, as we move on with the discussion, your company also completed a fast-tracked RC drilling at Flanagan Bore around mid-July. What's the next step here, and when are we likely to see the drilling results?
Yeah, see, I'm a geologist by background, so to me, the resource confidence is really important. With the mineralisation style that we have at Flanagan Bore, it's a supergene enriched style, so the mineralisation is more dominant or higher, or you get better grades at surface. So with that, there can also be quite a bit of variability in the manganese grades in the surface environment. But we've been quite fortunate at Flanagan Bore in that the initial drill program that we completed on really quite broad-spaced drilling, on a broad-spaced drilling pattern, was 200 by 100. And the continuity between section, downhole, and across dip was really excellent. So the mineral resource ended up being indicated. So in terms of classification, your lowest confidence level is your inferred, your middle is indicated, and your highest confidence is measured. So I was really quite happy that we were able to deliver an indicated resources in our maiden drill program. And that was completed in December 2021. I was actually on the drill rig for that program, and December in the Pilbara is not for the faint-hearted. It was hot. It was very hot. Every day it was 45 degrees, but it had to be done. It was really important to the company that we get this drill program completed and we deliver a mineral resource so we could further our studies on the project. So what I've done we booked another rig, and that came to site middle of the year, and we drilled out both deposits and did a bit more exploration drilling around those deposits to extend those resources. And we currently have 104 million tonnes of 10.5% manganese, so a massive resource. I would say with this last drill program that we've completed, we'll extend that, we'll expand that resource, and we'll also upgrade the classification because we've drilled it out now on 100 by 100 metre grid spacing. So we're getting a bit closer. But you guys got to remember these deposits are kilometres. They're hundreds of metres wide, 1.8 by 1 kilometre wide. They're big deposits. So drilling at 100 by 100 down to 40 to 50 metres was the aim, and that's what we've delivered. And so we'll be able to upgrade this classification, hopefully, to measured, and then there isn't much need for much more resource drilling after that. So we can use that measured resource and estimate ore reserves once we start the detailed feasibility work as well. Oh, those results, they should be coming through the lab now, and the aim of those is to get those all the way through August and September, and then we'll start doing a resource update. So hopefully in October we'll be able to announce a new resource upgrade for the Flanagan Bore deposits. But yeah, the information will be coming out over the next few weeks.
Great to hear that you're moving on with these projects, because I think out in that region there's been a lot of wet weather, and there's been a bit of shortage of workmen as well as post-pandemic issues. Were you finding that your projects were being affected by that at all?
Absolutely. Unfortunately, there was a cost involved with the rain. We had some very unseasonal rain over that sort of mid-year period. Usually, the Pilbara this time of year is spectacular. It's blue skies every day, but we just had quite a bit of rain over that time, and that did stop us getting around. But we still got the drill program completed. In terms of resourcing people, that's just across the board. It is quite difficult to get and attract good people as well to your organisation, which is why I've ended up having to do a bit more hands-on work. But I'm a geologist. That's what I was trained to do, and that's what I enjoy doing as well. So it's not really that much of a burden. to be honest, gets me out of the office and back into the bush, which is what I really enjoy. But yeah, look, it is the nature of the resources. There's always a boom bust cycle, and in the moment we're probably still in that boomish end. But with I guess some of the geopolitical situations around the world and signs of inflation, the heat might start coming off the resource sector as well over time, but it'll take a few years.
Thank you for sharing that one. And with like many things, I guess there's always that dependency on having stages complete before you can move on to the next one. And BCA has shared a 30-month schedule for the development of the project. I guess you're hoping for a chain reaction so it smoothly all just falls into place. But what can shareholders expect from this timeline of events, please?
Yeah, look, once we finished the scoping study, really it was launching into the more detailed feasibility work that we need to do. And like all projects, once you go into that more detailed feasibility work, there's quite a bit more on-site investigation that needs to be completed. During a scoping study, you do make quite a few assumptions on, for example, water supply. We've assumed that we'll get water supply within 4 to 5 kilometres of the project. Now we need to go and find it. We do have some good interpretations that suggest that within the tenement there should be enough water for the processing, but we need to go and find it. So I've just recently completed a heritage survey, and that was for archaeology and ethnographic heritage clearance, and we've done those. So now I can look at getting a rig to go and do hydrology, to go and drill test production bores as well, just to see if we can make sure we can de-risk that component, that we can find water on the project to supply the processing plant. There'll be geotechnical investigations. We're really going to start the environmental surveys as well, flora, fauna, understand who our key stakeholders are, maybe pastoral owners and also the traditional owners of the land, the Kalkine and the Yapati people who live at Newman, Jigalong and within the region. So we really want to up the interactions with our stakeholders in that area as well. And then really a lot more study on metallurgy. We were fortunate that last year we did drill more core than we actually needed for the scoping study, because I was anticipating that this year we would do more detailed metallurgical test work. So we've probably got 20 tonnes of drill core sitting on site that we can process and do more detailed test work on. And then logistics as well. It's a really big component of projects like this. We're not right next to Port Hedland. We're about 600 k's away from Port Hedland, so we need to understand the road, the access, upgrades, and logistics as well. So there's going to be a lot happening. A lot of the studies, I guess, we do as part of more detailed feasibility is really ticking the box and making sure we do it right. We do it once and we do it right the first time, so we get the right outcomes.
Thank you so much for sharing your plans with us, and best of luck with your projects moving forward. So as we start to wind up, you've touched on a lot of ESG information there, which is great to hear that you're so closely involved with the heritage of the land and the flora and fauna. So is there redevelopment and regeneration of plant life needed after your drilling in those areas? And what are the future projects or the near-term developments that we can expect from BCA as well?
So with the ESG, it's obviously making sure you look after the environment, and Black Canyon does intend to be a good custodian of the environment. With the project, one of the things, what we didn't do in the scoping study was include a solar farm. I've been involved in other projects in the past, and solar farms, there's a small capex impost on the project, but the carbon offset, I guess, from generating solar power to run components of your processing plant can actually bring down your operating costs as well, particularly if you put in wind turbine. But the energy requirements for a project of this size aren't that large, so you could almost be in a position where you could produce enough power on site. And like I said, the Pilbara generally pretty sunny. There's plenty of sun there to generate solar power. And also water. Water is a really key aspect for the environment. We need to be able to conserve water. reuse water where we can during the processing. So a big part of the metallurgical test work will be looking at minimising water usage, recycling, and reducing the amount of water we send out to the tails storage facilities as well. And when it goes out there, we look at retrieving water as well. So that's really important that we do that. But in terms of the next 12 months, really, it's going to be another busy period, no doubt. There will be twists and turns in the global markets as well. And we're quite fortunate that before this last sort of downturn, particularly in the capital markets, we did raise money. We raised about 3.2 million at 33 cents. And the directors as well contributed $200,000 of that. So we are putting our money where our mouth is with regards to this company and the project going forward. So we're secure with funding, which is a good feeling to have. But we're going to be spending money this year as well on advancing all the metallurgical test work and related detailed feasibility work. And we do have 2,500 square kilometres of tenure up in the East Pilbara. So there's plenty of exploration upside. And I am going to be turning my focuses towards discovering more manganese mineralisation over the next 12 months. So in the background, the feasibility test work will be going, but really looking at discover what I would like to find a smaller, high-grade manganese deposits, which we know exist in this region. And that could also prove to be a catalyst to have a share price uptick over the next 12 months. So really just do the basics well and work through feasibilities, but then also looking to make more discoveries on our large ground holdings up in the Pilbara.
Thank you so much for sharing your insights today. They've been really, really valuable. And just before we go, I think last year was known as the metals super cycle. How do you think that's going to progress moving on in the next 12 months? Any insights to share on that?
Well, look, to be honest, the last 10 years as a geologist, I've really been surprised at how sustained the commodity pricing has been. There's obviously been some twists and turns during that 10 years as well, with the 2008 GFC and so forth. But the markets for commodities actually bounced back really quite quickly after that. And even in 2020, the markets again bounced back reasonably quickly. So no doubt that's going to be happening over the next period. But in terms of super cycles, the last super cycle did depend on China quite a lot. But I guess the sheer amount of construction in terms of buildings and infrastructure that was going on in China, that doesn't turn off overnight. So whilst demand may reduce somewhat and may remain neutral over the next few years, you've got other countries, as I mentioned as well, like India, who may help fill that spot over the future. And let's hope that commodity pricing continues to increase where it is. That'll be a great outcome.
Thanks so much, Brendan. Yes, it certainly will. And we'll be watching this space to see what other news Black Canyon Limited have in store for us. So Thank you again for joining us. Was there anything you'd like to share before we wind up?
No, appreciate the opportunity to speak with you, Sage, on the activities Black Canyon have done and will continue to do over the next 12 to 18 months, and hopefully, investors will look upon the projects and the company and see the real opportunity to get in right now.
Thank you. And for those watching out there, the ASX ticker code for Black Canyon Limited is BCA. And today's interview was with Mr. Brendan Cummings, the Executive Director at Black Canyon Limited, who also spends some time on the field. So his insights are very valuable to us. And if you missed any of that chat, you can catch the full interview on our YouTube channel, Kalkine Media. So please make sure to subscribe. And this is Sage reminding you to stay apprised and invest wise with Kalkine.